Welcome to The Deep Dive, your essential download on the stories that really matter. Today, we're diving straight into Alphabet's second quarter 2025 earnings call. Our mission, as always, cut through the noise, pull out the critical insights, and figure out what it all means for you, the experienced investor. And this quarter, it really seems to be all about Alphabet pushing hard on AI and how that's actually starting to show up in the numbers and their outlook.
That's absolutely right. Alphabet put up some really robust Q2 numbers. Consolidated revenue hit $96.4 billion. That's a healthy 14% jump year over year.
Pretty solid. And net income?
Net income also saw a nice lift, up 19% to $28.2 billion. That translates to earnings per share up 22%, landing at $2.31.
Okay. And cash generation, I saw free cash flow was maybe a bit lower quarter on quarter.
Yeah, free cash flow for the quarter itself was $5.3 billion. You're right, it was impacted by a pretty big sequential jump in capital spending and also cash tax payments.
Right, those CapEx numbers we'll definitely need to unpack later.
For sure. But even with that, the trailing 12-month free cash flow is still strong at $66.7 billion. And importantly, they ended the quarter with a very solid balance sheet, $95 billion in cash and marketable securities.
Okay, so strong top line, healthy balance sheet. But as you said, the real narrative here seems to be AI.
Absolutely. I mean, management couldn't have been clearer. AI is positively impacting, they said, every part of the business. They're framing it as the engine behind their momentum, keeping them at the forefront of innovation.
And they talked about this differentiated full stack approach, right? What does that actually mean in practice?
Yeah, it's basically their way of saying they control the whole chain, from the underlying AI infrastructure.
Okay, like the data centers and chips.
Exactly. Their global network of AI-optimized data centers, cloud regions, they offer the widest range of TPUs, their custom AI chips, alongside standard GPUs.
And the proof point there is adoption.
Right. They pointed out that nearly all the Gen AI unicorns, those big startups, are using Google Cloud. And many are specifically using their TPUs. That's a pretty strong signal about their infrastructure capabilities.
So that infrastructure fuels the next layer, the AI research and the models themselves. What's new there?
Well, they've been pushing hard on their Gemini models. Gemini 2.5 family expanded, hitting industry-leading performance. They even showed off a super fast flashlight version. And, kind of impressively, used an advanced Gemini to get a gold medal performance in the International Math Olympiad.
Wow. Okay, so serious research chops.
Yeah, and it's not just research. Their V3 video generation model, apparently it's gone viral. Over 70 million videos generated since May. Shows they can translate research into engaging products too.
And then they bring this AI into the products people actually use, like Workspace, Chrome. How's that adoption looking?
It looks pretty explosive, actually. Monthly token processing, basically how much AI computation is happening, it doubled from 480 trillion to over 980 trillion.
That's a huge jump. It suggests real usage, not just playing around.
Exactly. The Gemini app now has over 450 million monthly active users. Daily requests grew over 50% just from Q1. And you see it in specific features too, like over 50 million people used AI meeting notes in Google Meet in June alone.
Real utility starting to emerge.
Definitely. Google Vids, their short video thing in Workspace, nearly 1 million monthly users already. And even subscriptions are getting a boost from their Google AI Pro and Ultra plans.
Okay, so AI is clearly driving user growth and engagement. Let's pivot to the other side. How's it changing search and advertising?
Well, search itself delivered double-digit revenue growth, which is strong. Overall queries, commercial queries, both still growing year over year. But the key thing they highlighted is that these new AI experiences are actually adding to usage. People are searching more, especially younger users, because of AI features.
Interesting. So AI isn't cannibalizing search, it's expanding it.
That seems to be the message. AI overviews, for instance, are now driving over 10% more queries globally for the searches where they appear. And they're faster now, powered by Gemini 2.5.
And multimodal search is growing too, like using Lens or Circle to search.
Yeah, strong growth there, especially combined with AI overviews. Again, most pronounced among younger demographics, which is interesting.
And what about this AI mode they mentioned?
Right, that's their sort of end-to-end AI search experience. Over 100 million monthly active users already in the US and India. They're planning enhancements like deep search and more personalization.
They even added an agent capability, like AI making calls.
Yeah, directly in search for US users. AI-powered calling to local businesses. Still early days, I imagine, but shows the direction they're heading. Oh, and on the shopping side, they launched a virtual try-on feature in search labs for billions of clothing items. seeing good early engagement, particularly with Gen Z, and it's rolling out more broadly soon.
So AI is changing the user experience. How about for the advertisers footing the bill?
Their positioning AI is reinventing marketing. The numbers they shared are compelling. AI Max and search campaigns, seeing about 14% more conversions typically.
That's significant ROI.
It is. And smart bidding exploration, they called it the biggest update in a decade, is delivering a 19% conversion uplift on average. Demand gen campaigns, especially using shorts, are getting like 80% higher brand lift, double the click-through rates compared to benchmarks for some advertisers.
And tools for creating the ads themselves.
Yep. Asset Studio uses their latest models to generate creative assets. Over 2 million advertisers are now using Google's AI-powered asset generation tools. That's up 50% year over year. So AI is definitely delivering value for advertisers.
Okay, well, let's switch gears to YouTube. Still a dominant force, right?
Absolutely. Nielsen data shows YouTube leading U.S. streaming watch time for over 2 years straight. Hit a record 12.8% of total TV viewing in June. That's a huge slice of the pie.
And Shorts monetization, that was a big question mark for a while.
It seems they've cracked it, at least in some key markets. Shorts now earn as much revenue per watch as traditional in-stream video in the U.S. And in some countries, it actually exceeds it, averaging over 200 million daily views globally now.
That's a major milestone. And YouTube's not just Shorts, obviously.
Right. Sports is huge. Fans watch over 40 million hours of sports content annually on YouTube. They're even streaming the NFL's first Friday game from Brazil this year.
And AI's role in YouTube.
It's improving recommendations, obviously, but also things like auto-dubbing, which helps creators and brands reach wider audiences by breaking language barriers. They also started rolling out new AI tools for creators specifically on Shorts this quarter.
And they're still pursuing that dual strategy of ads and subscriptions.
Exactly. Diversifying subscription options, expanding Premium Lite to 15 more countries, YouTube, TV, music, premium, all contributing to subscription growth. It's not just about ads. And connected TV, CTV, is a big focus for ads too. Ads viewed on CTV screens drove over 1 billion conversions in the last year. They're using things like QR codes and CTV shopping ads for direct response.
Okay, let's talk Google Cloud, because those numbers really jumped out. A breakout quarter, you could say.
You absolutely could. Revenue's up 32% to $13.6 billion. Strong growth in core GCP, AI products, and also Google Workspace.
But the profitability, the margin expansion, that was striking.
It really was. Operating income hit $2.88 billion. And the operating margin, it went from 11.3% last year to 20.7% this quarter. That's a massive improvement. Shows real operating leverage kicking in.
And this isn't just a one-off good quarter, judging by the backlog.
No way. That backlog future contracted revenue is now $106 billion. That's up 18% just from last quarter and 38% year over year. Huge visibility.
Wow. And deal sizes are increasing too.
Significantly. The number of deals over $250 million doubled year over year. And they signed as many billion-dollar-plus deals in the first half of this year as they did in all of last year.
That signals serious enterprise momentum.
It does. New GCP customers up nearly 28% quarter over quarter. And over 85,000 enterprises are now building with Gemini on Google Cloud. That's driving a 35x growth in Gemini usage year over year. Just massive adoption of their AI within cloud.
And they're innovating on the core cloud tech too, right? To support all this AI.
Yeah, things like new storage options. Anywhere. Cache, rapid storage, improving AI inference latency by up to 70% or 5x respectively. That kind of plumbing is crucial for performance.
And we're seeing tangible results from AI agents integrated into cloud products.
Definitely. They gave examples like Wayfair using AI for personalized customer experiences, Vittel using data agents on product feedback, Target using Gemini for cybersecurity. BBVA, the bank, is saving employees nearly 3 hours a week by automating tasks with Gemini and Workspace. They're rolling it out to 100,000 people. These aren't small tests. It's real-world impact.
That translates directly to ROI for those cloud customers.
Precisely. And Google is trying to build a whole ecosystem, too. They launched an open-source agent development kit, over 1 million downloads already. And this new thing, Agent Space in enterprise chat, search, agent platform, booked over 1 million subscriptions even before general availability. Shows strong interest.
Okay, quickly on other bets. Waymo still scaling.
Yep, steady progress. Launched in Atlanta, doubled its territory in Austin, expanded significantly in LA and the Bay Area, launched teen accounts in Phoenix. And the Waymo driver has now logged over 100 million autonomous miles on public roads, testing in more than 10 cities this year. Still an investment phase, but moving forward.
Right, so let's pivot to the investor context and outlook. The ad market seems strong in Q2.
Yeah, across the board, really, retail, financial services, healthcare. But management was cautious about H2, said it's too early to call. They flagged lapping strong 2024 financial services performance and also the potential negative impact from U.S. election spending comparisons on YouTube later this year.
Makes sense. But the big news on the outlook was CapEx, right? A huge increase.
Massive. They bumped the full year 2025 estimate from $75 billion up to $85 billion. That's a $10 billion increase.
Wow. Where is that extra money going?
Mostly servers and accelerating data center construction. It's all about meeting that incredibly strong cloud customer demand they're seeing, especially for AI. And importantly, they said expect a further increase in CapEx in 2026. That signals they see this tight demand-supply environment for cloud continuing well into next year, even with all this spending.
And that spending hits the P&L through depreciation, doesn't it?
Exactly. Depreciation was already up 35% year over year in Q2 to $5 billion. They expect that growth rate to actually accelerate in Q3. Plus, headcount is expected to grow in Q3, partly from new grads, and Q3 will also have expenses tied to the new Pixel launch in August. So costs are definitely rising alongside revenue.
On AI monetization, they seemed keen to downplay metrics like paid clicks and CPC.
Yeah, they reiterated that they don't manage to those specific targets. Paid clicks were up 4%, but they stressed multiple factors influence that. The focus, they said, is on user outcomes and advertiser ROI.
But the key data point was AI overviews monetizing similarly to traditional search.
Right. Approximately the same rate was the phrase. That's crucial. It suggests these new AI features aren't currently diluting revenue per search, which provides a really strong foundation to innovate on ad formats later without, hurting the core business now.
And for YouTube, this double-tier strategy of ads and subscriptions seems to be working.
They seem very happy with it. Called both businesses loved and increasingly important. They feel they understand when to push ads versus subscriptions, giving users choice and maximizing the overall pie. It's a complementary approach.
Let's talk about agents. That seems like a big future bet. What are the challenges there?
Reliability is one, managing the compounding latency and cost as agents get more complex, and dealing with brittleness agents failing unexpectedly. These are hard computer science problems.
But they're making progress.
Significant progress, they said. Models are getting more efficient. They're actually targeting 2026 as the year we might see broader agentic experiences roll out to users. And they're using it internally now. Agentic coding workflows are being deployed to their own software engineers, showing efficiency gains already, so they're eating their own dog food, so to speak.
Interesting. And longer term, do they see AI changing hardware, like moving beyond phones?
They do think AI will spur innovation in new form factors, like glasses eventually. Mm-hmm. But realistically, they see the phone remaining central for consumers for at least the next 2 to 3 years.
And how do they differentiate the AI in search AI mode versus the standalone Gemini app?
They see AI mode in search as more for information seeking, grounded in web results. The Gemini app, on the other hand, is positioned as more of a personal, proactive assistant for daily life. Think longer conversations, maybe even things like therapy-like interactions emerging. 2 different surfaces for innovation.
What about talent? Everyone's fighting for AI experts. How's Alphabet doing?
They sounded pretty confident. Reported healthy retention and strong hiring metrics. Their pitch is basically, come here to do state-of-the-art work, get access to massive compute, work with the best people, and actually ship products that impact billions. Seems to be working for them.
And this idea of agents democratizing the web, are they worried about concentration instead?
They acknowledge the potential for agents to improve user experience and expand access, maybe like the early web did. But they were also quite clear that you have to solve the business models for everyone involved, creators, publishers, etc., not just the technology. So a cautious eye on maintaining a healthy ecosystem.
Okay, last point before our trade idea, that massive CapEx spend. How sure are they about the return on that investment?
They expressed very strong confidence, pointed to high customer satisfaction in the cloud, low churn rates, and growing efficiency in managing those businesses. Their view is that the value they're delivering to customers is growing significantly, which justifies the investment and should lead to healthy returns down the line. It's a long-term bet, one they're clearly making with conviction.
All right, let's move to our not financial advice segment. And remember, folks, this is purely for discussion, not investment recommendations. Always do your own homework. But given everything we've just talked about, the aggressive AI push, the huge CapEx, that tight cloud supply, here's a potentially outrageous but maybe plausible trade idea.
Okay, I'm intrigued. What have you got?
How about a contrarian pairs trade? You go short, select data center REITs, maybe some legacy cloud infrastructure players.
Okay. And the long side.
Long Alphabet, specifically focusing on the Google Cloud momentum.
Right. So what's the outrageous angle that makes this a contrarian play?
The bet is on Alphabet's internal AI efficiency. Bet that their integrated stack, their custom silicon, their software expertise allows them to build and deploy capacity faster and cheaper than the market anticipates. If they can do that, they could potentially capture an outsized share of that $106 billion backlog, maybe even accelerate growth beyond current expectations, while legacy players or REITs struggle to keep pace or face pricing pressure.
Interesting. So you're betting on Google's execution speed and efficiency in bringing AI infrastructure online, essentially disrupting the perceived constraints.
Exactly. It leans into their strengths and the massive demand signal we're seeing. Again, not advice, just a thought-provoking angle based on the call.
Got it. Okay, so let's recap the key takeaways from Alphabet's Q2. Really robust growth overall, clearly fueled by AI innovation pretty much everywhere. Search, YouTube, and especially Google Cloud. Cloud saw fantastic revenue growth and that really significant margin expansion backed by that massive $106 billion backlog.
And they're not shy about investing to capture that demand, are they? That $85 billion CapEx forecast for 2025, with more potentially coming in 2026, signals huge confidence in the long-term ROI of their AI strategy, even if it pressures margins near term.
Definitely. Key things to watch going forward will be how user behavior continues to evolve with these AI features, especially in search, and also how they continue to balance that monetization between advertising and their growing subscription businesses across YouTube and potentially elsewhere.
So plenty to think about. What really stands out to you from this quarter's AI story at Alphabet? And how do you see that tight cloud supply situation playing out over the next year or so? We encourage you to chew on those questions and consider how these insights might fit into your own investment thinking. Thanks for deep diving with us today.